Hi, my name is Miles McHale. I've been in the financial industry for over 40 years, specializing in institutional investment sales and specific subject matter focus expertise on retirement and the charitable arena, working with endowments and foundations. I've also been blessed enough to be an adjunct professor with Cannon Financial for the last 9 years and delighted to be speaking to you now. We at Cannon are working very hard to give you, our client, and the communities in which you live and work one important thing: hope. One where we're working with customers through drive-up windows, plexiglass barriers, and masks, adding additional safe space between ourselves and our colleagues, working and dealing with operational centers and 1-800 numbers, and of course, kids and dogs in the background during those most important client calls and client meetings. Although this new normal is temporary, hopefully, we at Cannon appreciate everything that you are doing to keep the focus on your client and supporting each other. And that's what we're here for as well. Each of you are playing an important role, and we're here to support and provide advice and decipher information for you to continue to be the best in your chosen practice. At Cannon, we see part of our commitment to you as thought partners to provide a few perspectives from both a financial and best practice vantage point regarding the CARES Act, Corona Aid Relief and Economic Security Act, and its impact on not-for-profit and charitable organizations. Now, our audiences here is very diverse. Our goal is to provide 2 or 3 nuggets that you can use and apply to your practice today. So we're getting the dialogue started and continuing these important conversations, and we'll be doing this as one of a series of segments. I mentioned diversity. Many of you are important practitioners within the not-for-profit community, perhaps an executive director, a fundraising professional in one of these important community-based organizations. Others have been privileged to serve the not-for-profit space as a financial services provider, a trust officer, a portfolio manager at an RIA, a CPA, a relationship management professional at a bank, an insurance company, or an asset management firm. All key components to the successful not-for-profit community. So as we start this dialogue, and as a follow-up to this session, we'll provide a series of links and resources that will essentially act as an FAQ that you may find helpful. And as I mentioned, there's several components to this CARES legislation. It's very detailed, it's somewhat confusing, and it's certainly very complicated. Now, to be clear, the Small Business Administration, the SB loan program, and those components, the PPP, the Paycheck Protection Program, suspension or postponement of tax filings won't be outlined here, though CARES certainly is offering a lifeline from the government to both the for-profit and not-for-profit sectors. In addition, several of my Cannon colleagues will be addressing how CARES and also the SECURE Act that was passed at the end of the year will provide some additional retirement distribution strategy and estate planning strategies, and outlining several options that you may want to consider. But our focus here is on the portion of the bill that deals with directly not-for-profits. Now, the title is USA Cares for Not-for-Profit Community. I had a little fun with what a year it was last month. That certainly has a dramatic impact, both financially, physically, on people's wallets, on their jobs, and on their lifestyle. So, as I said, our focus here is to talk about the CARES Act, and specifically, we passed the bill and signed into law on Friday afternoon, March 27th, by our president. Certainly, as I said, has financial, lending, and employment relief opportunities, but several sections deal directly with its impact on charitable organizations, and really as Cannon sees them now. The key there is really the definition of a not-for-profit institution, and the legislation defines them as one with fewer than 500 employees, who are 501c3 organizations, and who do not receive Medicaid funding. Very important. The charitable contributions, several things have changed. The increase of the individual's adjusted gross income limitations have gone to 100%. I'll get into an example of that when I get into a nugget in a minute here. So it must be made to a 501c3 organization and they are directly excluding, as noted here, supporting organizations as well as donor-advised funds. Contributions exceeding 100% can be carried forward for 5 years. Key there. There also was an increase in the corporate limitation from 10% to 25%. That's very important here. Excess contributions also have that 5-year carry forward, and they again are solely going to charitable institutions or organizations that are defined as a 501c3 by the legislation. Also to note, an increase in limitation for donation of food inventory by a business. Here, a C corporation could contribute 25%. All other businesses have got a 25% of their aggregate net income for donation of food inventory to an institution. What's that all mean? I guess a couple different ways. The situation here, there's also included a new $300 deduction of cash for gifts to qualified 501c3 organizations, available for non-itemizers only. This is a permanent change, so it will be in effect beyond 2020. And CARES, again, is not, or is being specific to exclude any donation to a DAF, a donor-advised fund, or an SO, a supporting organization. I think that's important, and I'll include what I refer to as a canon comment. Here, it's going to be hard to say whether this provision is going to provide any help to not-for-profits. Non-itemizers, generally speaking, happen to be a group that do not have as much disposable income. But we believe with the right message and the right target conversation to the right audience, this certainly could provide that lift that's needed here. And we go back to prior crisis situations in the past. Think Katrina, think the recent firestorms out in California. There, it was the $1, $2, and $5 efforts that provided significant lift to the charitable institutions. The way we think about it here is the new deduction could save someone in the 10% tax bracket, provide them a $30 savings in taxes. So they donate $300, they're spending $270 to make that $300 gift. And obviously that spending rate will go up depending on the tax brackets. The impact here is not-for-profits can design a marketing piece that can say and describe what $300 will buy at the cost of only $270. So example, a $300 gift, and we've all seen the pressure that food banks are under with demand completely exceeding supply. The individual could target that message of saying a $300 gift will provide meals to a family of 4 for a month at your local food bank. Or possibly that $300 will award scholarships for 1 week of camp for 2 children. That's an impactful comment. That's where somebody can make a difference. So make it your own, make it personal, and you'll see the results come back tenfold. Nugget number 2, here was a suspension of limits on cash gifts made in 2020. Prior to the bill, individuals were capped at a 60% of their AGI. So the example I have here, donor with an AGI of $100,000 gives $70,000 to charity. Prior, he could only deduct the first $60,000, 60% of that cap, and could carry forward that $10,000 to a following year. With the CARES bill, the stimulus package, that full $100,000 donor donating the $70,000 could qualify and fully deduct $70,000. So there's no cap on cash. Trying to get that information out. The deduction limit for capital assets, stocks, real estate, real assets is still capped at 30% of AGI. Corporate gifts, as I mentioned before, a C Corp or an LLC taxed as a C Corp, their giving has been raised from 10% to 25%. And the benefit does not apply to cash gifts made to a DAF, as I mentioned before. And it's not a permanent change. We believe it will revert back to prior rules after 2021. Well, canon comment there is the elimination of the AGI ceiling for individuals certainly could increase, but we don't know many individuals that carry forward their deduction year over year. So it could be making a meaningful change for charitable organizations. However, given the fact that many not-for-profit groups are also soliciting and currently working with corporations, the increase in the corporate cap may be worth promoting and exploring. and being able to have that conversation with the ceiling increase for the corporate donations going forward. And again, just re-emphasizing, DAFs, donor advised funds, and supporting organizations, SOs, are excluded, are not going to be benefiting here. So a public charity, a 501c3, certainly will have a leg up with respect to these new changes when a donor weighs giving to a DAF or to a public charity directly. So as I said, that was the financial side. Shifting to a few observations regarding client relationship management and client communication, best practices during crisis. Remember, all of your clients and prospects are starved for information, whether they're an individual in the wealth management space or those in the charitable space. And you could be talking to the same person. Someone who's an executive director is also worrying about their 401k or their 403b or 457. Many of the institutions, their charitable operations and their annual fundraising, galas, golf tournaments, auctions, etc., have been postponed and canceled. And they're wondering how their important community effort is going to be able to fund their operations going forward. Now, while the SBA loans and the PPP already mentioned may assist in somewhat there certainly are going to be significant gaps in fundraising. Advisors and relationship managers who proactively reach out and communicate are, one, going to be most appreciated, and two, are going to be remembered when the next opportunity or RFP is put in motion. The client may not always remember what you did for them, but they're going to remember how you made them feel. I can't emphasize this enough. Pick up the phone and you'll differentiate yourself and your organization from your best competition. And while you're talking to them, have a conversation and say, is there anyone else in your sphere of influence? Any other executive directors of not-for-profit institutions? Any other development and fundraising professionals that you think I would benefit with a conversation from our organization? And I'm telling you, it's going to come back to you threefold. Finally, just a few candid comments in general. 3 things to consider. Volunteer. If you have the opportunity, consider reaching out to those not-for-profits that you have a passion for and ask if there are any needs that you can safely support. Healthy, low-risk individuals may be able to fill some gaps and volunteer delivering direct services such as packing or delivering meals to the elderly or the less fortunate. Additionally, they may have other needs that can be supported remotely and safely. Advocate, number 2. Be the voice for the vulnerable population and the not-for-profits that you care so much about, and encourage others in your network to do the same, who are able to contribute both the time, talent, and treasure. And third, back to treasure, increase your support. Consider increasing your support to those that are most vulnerable, directly responding to the spread of COVID-19, both locally and nationally, without decreasing your support to charities that you're currently supporting. As we continue to harness and embrace the technology in order to keep in touch with your most important relationships, on the next slide, I've outlined some of the best practices to consider. And practice is a very important word to focus on. Let me highlight that. These may be points that you want to consider and incorporate into your not-for-profit practice. Certainly, with now phone appointments, get the team together ahead of time. Make sure you have an agenda for what you want to cover. Voicemail. Have your voicemail effective. Let them know if you are working remotely that you will be checking your messages on an ongoing basis, or if needed, provide the cell phone number to them so they can call you directly. On the phone, you're not going to have the capability of measuring or reading nonverbal cues. So you'd have to increase your rapport, understand that pauses, see what I did there, check-ins. Now, should we review that because we covered a lot of information very quickly? Check-ins are going to be very important to make sure that concepts and the information that you're conveying is received the right way. Lastly, as it relates to phone, probably any situation, active listening and empathy have got to be focused. You have to ask them, you understand, I know how you feel. 80-20, and this time 80% listening and 20% talking. I know that's tough for a lot of individuals, myself included. WebEx appointments like we're doing here. Start early. Practice, practice, practice. I can't underestimate or underemphasize that, because get there early. Make sure the room is all working before. If it's a 8 o'clock call, make sure that you're in there 5-10 minutes ahead of time to make sure everything's up and running and ready to go. Your digital facilitation skills are going to be more important than ever. As I said, being able to pause, being able to not talk over each other, make sure that you and your team know that if you're covering information, if you're conveying performance of a portfolio or an idea that you want to get across to them, that is done in the most effective way possible. So as a summary, we at Canon are closely monitoring legislative and regulatory developments that are happening, including a potential Phase 4 congressional relief package, and we'll be providing updates and guidance as soon as they are released. As I mentioned during the opening of this telecast, we are working to release an FAQ for not-for-profits to answer commonly asked questions. So stay tuned as legislation becomes enacted and put into place. And as I said, there'll be several series of this information for your benefit. Finally, in closing, while all the above points that we've covered today for you to share for you as clients and partners in this extraordinary time, please keep in focus the most important word: hope. We will get through this together. I don't know what the world is going to look like on the other side of COVID-19, but I am confident of 3 things. First, that people will still be the center of everything we do. Second, I know that our focus will, on balance, bring us the best of the past into a new future that we'll create together. And third, we will be stronger because we tackle this together. In the meantime, keep your family and yourself safe. Stay at home means exactly that. Take time to exercise your mind and your body, and please reach out to the Canon team if we can assist you in any way. So on behalf of the entire Canon family, be strong, be safe, and thank you again. This is Miles McHale. Thank you for your time. Look forward to talking to you soon.